GST wing steps up anti-evasion drive. Stepping up its anti-evasion drive, the Goods and Services Tax Wing of the Central Board of Indirect Taxes and Customs has started a process of issuing show cause notices to thousands of entities for alleged evasion or underpayment of tax. It has already issued notices in about 20,000 cases, among 34,000 scrutinized for tax evasion in 2017-18, the year in which the comprehensive indirect tax was rolled out, sources said. The tax department reckons that evasion by the entities in the year were to the tune of 2,000 crore. It also sending out notices to another lot of 35,000 cases for the year 2018-19, the sources added. Based on the explanation, we will decide whether the demand has to be confirmed or the show cause notice has to be closed, a senior official told FE. Of the 34,000 cases selected for 2017-18 based on risk parameters, in 95% of cases, scrutiny has been completed, and in 50 to 60% of cases, explanations have been sought for short tax payment, the official said. With the GST rate rationalization delayed to 2024, the CBIC is stepping up scrutiny and audit of GST returns of curb fraudulent availing of input tax credit and tax evasion to boost tax receipts throughout better compliance. The selected business entities are being looked to see consistency in the information filed by businesses about input supplies, output supplies, input tax credits, and tax payments. During the scrutiny exercise, the interface with the taxpayer are being minimal and data is made available through various sources like the Directorate General of Analytics and Risk Management, Advanced Analytics in Indirect Taxation, GST Network, and e-way bill portal, among others, are being relied upon for this purpose. Income tax payments by these businesses are tallied at the back end also to see if there is any discrepancy or not. Increased scrutiny and audit are leading to greater complaints, which is reflected in GST collections. Average monthly GST collections rose to 1.49 trillion in the first 7 months of the current financial year, compared with the 1.23 trillion month in full financial year 2022. Higher GST mop-up means the centre could garner up to 1.5 trillion extra than budgeted in central GST in financial year 2023, while states together could corner a little more than that. In additional receipts, boosting much needed resources to fund programs. The GST revenue neutral rate made before the GST rollout in July 2017 was 15 to 15.5%, but the average GST rate at present is around 11.5%. The proposed GST slab rationalization aimed at increasing the average GST rate will likely to be delayed in 2024 due to the state assembly elections in 23 in the run-up to national elections in April to May 2024.
நண்பர்களே, இந்த வீடியோ உங்களுக்கு பிடித்திருந்தால் லைக் பண்ணுங்கள், ஷேர் பண்ணுங்கள், மறக்காமல் கமெண்ட் பாக்ஸில் கமெண்ட் பண்ணுங்கள். இந்த சேனலை இதுவரை சப்ஸ்கிரைப் பண்ணாதவங்க உடனே சப்ஸ்கிரைப் பண்ணுங்கள். நோட்டிஃபிகேஷன் உடனுக்குடன் உங்களை வந்தடைய வலதுபுறத்தில் உள்ள பெல் பட்டனை கிளிக் செய்யவும்.